Welcome back, traders. My name is Manuel Fonseca, founder of Smart Habits. In today's video, I'm gonna explain to you the simple market structure in which I just gonna explain to you what is an uptrend, a downtrend, and a consolidation, all within the smart money concepts trading strategy. If you have ever felt confused or overwhelmed with complex trading strategies, I kindly suggest you to download my free ebook, in which I just break everything down in very actionable steps. So you can go to the link of the description of this video, and there you can find my strategy. So no more to say, let's go to the video you came here to watch.
All right, so we're gonna see the basic market structure. First of all, we need to define what is the market structure, and in other words, is how the price moves, and it moves in waves or impulses. And here is a concept that you may know that is called higher highs, lower lows. Okay, so but let's go in depth about this. The price simply moves in certain impulses, as you can see in right here, or in certain waves is also called, correct? Now, the prices, as it moves, starts letting certain footprints, correct? And we can point it out as lows or highs, as we are seeing right here. So when the price moves, it can let this, correct? This would be a low, and then this would be a high, right? The next footprint, let's say, or the price let us is this low, but it is called now a higher low, right? It's a higher low because this low is actually higher. Sorry, my spelling here is actually higher than the previous one, correct? So the next still wrong spell it. The next movement that the price left, okay, is a higher high, correct? Following the next movement. So this one will be, I gotta put just HH, higher high, correct? A higher high, correct? And next low will be again, a higher low, correct? So little by little, we start seeing that the price is building up certain structure, right? And this structure that the price is building, as this example, it's called a bullish trend line, correct? So we have here a simply low, then a high, then we have a higher low, higher high, higher low, higher high, and so on, right? This is how we need to understand. Now, the price or the market, right, has three stages mainly. The first stage is an uptrend or a bullish trend, which, as we can define, and it is said in the words, it's just like going up, okay? It's creating higher highs and higher lows, okay, as it keeps moving in the price. The next stage of the price is called a downtrend. Now, the downtrend is actually the opposite of what we just have seen. So let's see now how it will be, all right? So simply, it's the same that we had in a bullish trend or an uptrend, but in reverse or the opposite, right? So let's imagine here we have here a high, which is gonna symbolize with an H, right? And then this high lets a low, perfect. And now the next high is not higher than the previous one, so it's a lower high, right? So it's a lower high, which is, okay, it's a lower high in this case, perfect. And the next low is of course, is a lower low. And the price keep going in that movement, okay? So it start moving and letting these waves or impulses. And in this case, in this example of a downtrend, right, the highs are lower and the lows are lower than the previous one, right? That's why this is called an downtrend or an uptrend, correct? So this is the second stage of the market. So we have the first one, it is an uptrend, and then we have a downtrend. The third one is called consolidation. Now let's see how or what it means. Perfect. Now here is the consolidation, and I'm gonna make two examples of a consolidation. Now let's imagine that we are in an uptrend, so we're having here higher highs and higher lows. Higher high, in this case, this would be a higher high. In this example, higher high, and this would be a higher low. Correct? Perfect. So it will be a higher low. So and then we will expect a higher high. Correct? That actually happened. So higher high, higher low, higher high. Perfect. Consolidation is when the price is trapped between a higher high or a higher low, and then we're gonna see the example in reverse. Okay, so it means that all these movements here do not break either the higher high or the lower, or the higher high or the higher low right here, right? And the price is consolidated. Okay, what it means, or in other words, what is happening here? Actually, what is happening? The price is, most of the time it happens when we are out of the session, the main session, you know, London session, New York session, and those ones, because the higher impulses are created in those sessions. Now the price is just slow, because sometimes it just gets slow, and most of the times the price makes this movement and creates certain type of noise. I mean, it started building certain inner structures that may confuse us as a traders, right? And especially traps more traders, retail traders, right? Because it start creating certain patterns here that people start perceiving as a possible reaction, and they get trapped, correct? So it's a consolidation where the price is within a higher high or a higher low in this example. Now I have an example of a consolidation in a downtrend, which is the one in the right, correct? Which is the same story that we have here. So the price is making here lower. In this case, we come from a high, then we have a low. This is a lower high in this case, right? Lower high. And then we have a lower low, right? And the same story happens. So, oh, sorry, it makes here a lower high in this case. Let me check. A lower low, excuse me. Makes here a lower low right here, and then it makes here a higher low right here. A lower high, excuse me. Perfect. So again, the price makes here high, low, then a lower high, then a lower low, lower high, lower low. You get confused when you repeat this many times. And then what happens after that? The price just gets into this, making certain movements, but do not get it out of this zone that we may call a consolidation area, where the price just consolidates, right? Or traps other professional traders or just other traders, correct? And these are the three main stages of the market. So we have the first one is an uptrend, you know, higher highs and higher lows continuously created by impulses or waves. Then we have a downtrend, which is lower highs and lower lows built or created, correct, and consecutively. And then we have consolidations. Consolidations are created and when the price is going in an uptrend or in a downtrend. Okay, so these are the main three consolidation, or the main three market stages that we as traders needs to recognize. Okay, now this is a basic market structure class, and what is the next thing? Most of the traders get it wrong. Most of us in certain moment we mess it up understanding if the price is making an uptrend or a downtrend, right? And sometimes it's because, or this is the main reason, is like we don't zoom out enough to see the bigger picture, right? What is the meaning of that? Is the next. we imagine that we, as a traders, we never, I mean, in certain scenarios, we can see a complete uptrend or a very clear downtrend, or sometimes a very clear consolidation, right? But it's especially in the consolidations when we get trapped or we get confused. Why? Let's see, and let's zoom up here. Remember that we are having an example of an uptrend, correct? This example we're seeing here. The market is an example of an uptrend. So, for example, in this case, we are in a bullish trend, correct? We can see we have here higher highs and higher lows, right? But now we start seeing this, the prices start consolidating, correct? And we as traders, we start seeing these type of movements, right? So because we don't have clear this, like when is the lower high, or in this case the higher high or the higher low, correct? We start like, oh, we start perceiving this as a downtrend, right? Or we start like watching certain patterns that we are taught by, I don't know, TikTok traders, or maybe the research we have done on Google. And for example, we would think the next, okay, we have here I don't know, a trend line is bearish, right? A bearish trend line, because we can see here this is actually going down, and then people start executing selling orders here. I understand this it's very understandable, because people are seeing here a pattern, right? And actually the market, or the market makers, the creators of the market, they do that intentionally to make us get confused. So then we have an order, a certain movement here, very, very slightly to the direction we were expecting it will be moving. And then, I don't know, as the time passes, goes up, right? And goes up. Why? Or why is the reason it goes up? Because we are in a bullish trend line, right? On an uptrend. And consolidations are made for make us get confused. And it's the same story if we are in this example with in a consolidation, and we are in a downtrend. It's the same story. So we start seeing certain impulses and certain patterns here. Again, it's a downtrend, correct? And what happens after that? The same. We start seeing certain patterns. For example, we know that this is a lower high and this is a lower low. Yet we are expecting this is the most logical thing in this case is to search for selling patterns, correct? But the price makes something like this. Imagine the market is actually right here. We see this, and we start thinking the price is going up. All right, why? I don't know, probably the price moves a little bit right here, makes something like this, and you start seeing a pattern of a double bottom pattern, which is a bullish pattern. Most of the people watch that, and then you see a triple pattern, triple bottom pattern, right? Which most of the people think this is for buying, right? Well, actually, it is, and people start like buying in this moment, but they forgot for a while. They forgot the major structure. They forgot that this is a downtrend, and as they get into the market, the price keep going towards the direction is already showing us, but we unfortunately we were not aware enough, to remind that this was a bearish trend line. And this is the thing, okay? This is how most of us get trapped in the market. And I just put two examples here with a trend line and here with a pattern that are the most common patterns we see on internet, TikTok, etc., right? And most of that happen in the consolidation stages, let's say, that the market shows. So we as traders need to be super aware of this, okay? So my piece of advice with this small class is just to understand the basic market structure. If you're basic or just new in this, my piece of advice is just try to recognize uptrends and also downtrends. And as you can see it, you start realizing that at the very beginning of an uptrend or a downtrend, or at the end of the uptrend or at the end of the downtrend, you're likely to see consolidations, right? So that would be like a homework for this video, okay? Try to identify, first of all, lows and highs, okay? And higher highs, higher lows, and so on. Then lower lows and lower highs, correct? And then understand at the beginning of the range or at the ending of each, not range, or the impulse, excuse me, at the beginning of the impulse or at the end of the impulse or the waves, correct? The consolidations, and see how the price plays with us, okay? Because the market makers play with us. So they start making this type of patterns. So, for example, double tops, triple tops, head and shoulder patterns, wedges, all those basic patterns that we can see on internet, they're all mostly created on consolidations. And most of the patterns that are created are against the main trend line. So what I mean by that is, like, imagine, okay, we already know this is a bullish trend, okay, uptrend, right? So the market makers start creating bearish or selling patterns in this consolidation to make us think the price will go down, right? And what happened actually is that the price maybe give us a little bit of joy, a little bit of happiness, because it like confirms our patterns. But then after certain moment, or we reach a proper, fundamental news, or we're just in a London or New York session, the price move with the actual current movement or actual trend line, which in this case will be bullish, correct? So this is it about the first class. Please take this into consideration for your trades. Please do not believe what I'm saying. Just execute it, put it into practice, and then you will get up to your own conclusions, which is the most important thing here. Okay? All right. This is all for today's session, and I will expect you in the next video.